Can I please welcome on stage Joe Bae, co-CEO, KKR, Stefanie Drews, President of Nikko Asset Management, Jon Gray, President and CEO of Blackstone, Yie-Hsin, President and CEO of State Street Global Advisors, and Robert Kapito, President of BlackRock. Now, Prime Minister, you'll give a speech after this. So I know after the panel you'll give a speech. But I know you really believe in, of course, emphasizing the power of listening. So we'll see from what the finance world in New York actually makes of everything that you've put in place. Of course, your administration has taken various steps to achieve structural wage increases, growth investment through public-private cooperation, and strengthening corporate profitability to overcome deflation and low growth. Now, on the finance side, and you touched on this, the administration has embarked on an initiative to promote Japan as a leading asset management center, which will focus on today aiming at various stakeholders in the investment value chain. For example, in doubling asset-based income plan, action program for accelerating corporate governance reform, and reform of asset management sector and ownership. So thank you all for joining us. Also on stage, Joe, let's start with you. Where do you see, when you look at Japan's initiative for promoting Japan as a leading asset management, what's your view? How has it worked?
Thanks, Francine. Thank you, Prime Minister Kishida, for having us today. Listen, I think under the leadership of Prime Minister Kishida, Japan has just done an incredible job in terms of the revitalization of the domestic economy in Japan, as well as the financial sector. To put in perspective from the KKR perspective, outside of the United States, Japan today is our single largest destination of investment capital. It gives you a sense for the sea change that we have seen in Japan in the last several years around corporate governance, around the willingness to work with foreign investors, a lot of the initiatives I'm sure the Prime Minister will talk about later today. But the environment in Japan is radically different than 5 years ago or 10 years ago. We are investing 5 times as much on an annual basis in Japan today than 10 years ago as KKR. And it's all because of the very, very favorable policies, the pro-growth policies, the reform policies that Prime Minister Kishida and his administration have really led.
Thank you so much. Stefanie?
So I've got the luxury of having been working in London for 18 years, before 10 years in Japan. So I'm kind of looking at the policies from both angles. And I think the policies that have been put in place are quite extraordinary from both an international angle and a Japanese one. And the reason for that is how they were put in place. So the first thing that the administration did is look what was already available, what was happening already. Corporate governance code, twice revised, stewardship code, twice revised, overhaul of the Tokyo Stock Exchange. And then they looked what was missing, and what was missing was drawing the savings from the deposits into the capital markets. And that's why they put in place the doubling of asset-based income plan. And the star, of course, was the new NISA, which is a vehicle that really drove the shift into the capital markets. And then the policies were launched with that in mind. So I think it was that careful sequencing that made it happen, and made it happen fast. The policy is only 9 months old, so it's very, very young, and yet it's already fully embedded in the industry. And so a huge achievement.
Jon, what's your view on the policy so far?
I think the policies have been a home run. I think we as investors, like the Los Angeles Dodgers, have benefited tremendously from Japan. What we've seen is a real pickup in both inbound investment into Japan and also outbound investment from Japanese individual investors. And it's really been a sea change in what we've seen. At Blackstone, we've been in and around Japan for 4 decades. It's been very important to our firm, but the pickup in activity has been striking. So we privatized 2 companies in the last 6 months. Privatization of public companies rarely happened in the past. We've bought non-core divisions from Japanese companies this year, from Sony. Again, in the past, companies didn't do that. But the focus on governance and shareholder value has made an enormous difference. And it's made folks like us much more excited. The opportunities in healthcare, in hotels, in data centers, in energy transition, advanced manufacturing, there's just a lot to do there. And the market's really opened up. And then in terms of looking outbound, what we've seen is by reforming the market so that individual investors can invest in private assets, in real estate, in private credit, in private equity. We've partnered now with Nomura, Daiwa, Nikko, and been raising significant amounts of money so that Japanese investors can generate higher returns. They can move from just being savers to being investors and have better retirements. So it's been a complete change in terms of the levels of activity. And like Joe, we've really seen an enormous pickup. And it's really a credit to the administration of Prime Minister Kishida. So we thank him.
Thank you so much. Yie-Hsin, how has it changed your view on the country?
So I think that the government's initiatives and the efforts of the Prime Minister has really made Japan probably the most exciting time for our business today. From the expansion of the NISA program to elements of the DC program, increasing contribution limits, all of this, along with the focus on building up an organization to enhance individuals' financial education and literacy, I think these are really creating a new set of Japanese investors and attracting capital into the country. At the same time, the corporate reforms on the asset management side has also encouraged many new entrants to come into the country. And I think all of these initiatives, all these reforms are going to really reshape Japan's investment landscape. And for us, we at State Street have been in Japan for not quite 4 decades, 3 decades, 500 people strong across the country. We recently opened up a new office in Fukuoka. We're adding and tapping into the tremendous talent pool that's there to really deliver bespoke solutions catered to the Japanese market. And are very excited both on the servicing front, supporting asset owners and asset managers, but then also State Street Global Advisors is the asset management arm of State Street. And we've been busy launching new products, 11 new ETFs we filed that follows on a number of index funds we brought to market earlier this year. And we're very excited to have 2 of our flagship S&P 500 and gold ETFs now part of the NISA program. So we're very, very excited about the developments that have happened.
Rob?
Well, great. Well, thank you, and we really appreciate being here today with you. It's an honor and a privilege, Prime Minister. Let me get a little more detailed. We appreciate the holistic approach by the Japanese government, and specifically doubling the amount of citizens' income from investments, promoting a shift from savings to investments, and especially the updates in the NISA investment vehicle. And lastly, introducing all of the asset owner principles. Now, the asset management industry is evolving in 2 important ways. One is that asset managers are now filling the role in the financial marketplace that is going to support the Japanese economy overall, bringing together entities with a surplus of funds and those with a need for funds. And there's a growing demand for Japanese assets globally, thanks to more participation in the market via NISA, decarbonization-related investment opportunities, and improvements in corporate value creation. So we believe that we have a responsibility as an asset management company to bring our global expertise to bear on the clients in Japan, and in turn, supporting the sustainable growth of the Japanese economy. So these achievements under your administration with the investment income doubling plan and the asset management reform initiative are really quite remarkable. And we believe that the Prime Minister and his government deserve a lot of credit for that. So thank you. What's most important from here is that the efforts made by the government continue. They have to continue into the future, and there's a couple further measures to be taken. One is the FSA's recently proposed revision of tax-related rules that effectively block investment in ETFs due to 1,000 yen minimum investment amounts in the cumulative type NSA program. And I believe, along with our friends from State Street, that ETFs will provide choice at a low cost, which is critical to long-term savings in order to build robust and diversified portfolios. And that step being taken by the government to introduce a legal obligation for all players in the investment chain to act in the best interest of their clients. And it's really important that this is implemented in a very effective manner. Thank you.
Great, thank you so much. Stefanie, you're on the ground. How has it changed your business, Nikko Asset Management, and some of the deals that you're seeing?
Quite significant, actually. I mean, what I love about this is that a lot of people are now looking at Japan very seriously as a place that they want to be. And there's two ways that you can go into Japan. You can go in and set yourself up from scratch, build a full infrastructure end to end. Have everybody learn the language, or maybe not, and so it can be quite a big effort to go in, but you will be fully supported. Another way in is the way that I love, which is basically in joint venture partnership with domestic players. So what happens then is we have foreign companies come in, use our end-to-end infrastructure, operations, IT, marketing. They have real estate on our website, social media, client servicing, everything. And at the same time, they bring in something that Japan is missing. So it's a really win-win situation. So in our case, for example, we wanted private assets with a decarbonization angle into Japan. And so we found a wonderful company in France called TKO. It's a listed company. They're very, very strong in that space. And they're now very deep partners with us. So they bring a skill set into Japan that is maybe not as strongly represented yet. And for them, the benefit is they have an immediate access to Japan into every single channel through a domestic company. So I think that that's something that I've really felt has been extremely beneficial. We have a total of 6 joint ventures, and we will keep growing them. These policies have opened up the market to foreigners coming in whatever way they want, but that's how it's worked for us.
Joe, you were talking about some of the numbers, which are actually really quite incredible. Where are the biggest opportunities in Japan? And are you most surprised at the comprehension of the reforms or actually the pace of change?
Let me hit the first part in terms of the areas of opportunity. I think in the private equity space, what we're seeing is just a fundamentally different landscape in terms of the ability to execute and be a partner to corporate Japan in terms of non-core assets. In the last decade, we've done, I think, 15 carve-outs in partnership with really blue-chip Japanese companies, right? And we hadn't seen that historically, right? So whether that's Mitsubishi, whether that's Hitachi, Panasonic, that's a new trend in Japan, and I think we're in the very early innings of that trend. There's a lot more to go. I think in terms of this transition from a savings economy to an investment economy, that's going to unleash enormous economic activity in Japan. Like when people talk about China, they say you got to balance the savings to domestic consumption. In Japan, it's about savings to investment. There are over $13 trillion of deposits and annuities in Japan, generating very, very low yields for the savers as well as economic activity within Japan. If you could start migrating those capital flows from savings in deposits to investments, whether it's real estate, public equities, private credit, there's an enormous opportunity for Japan to continue its growth trajectory.
Jon, what kind of pace of change are you seeing in the country?
Well, we're seeing enormous change. I would say to start, though, that when you look at the growth in wages, when you look at the fact that negative interest rate policy is gone, you look at the record stock market, this is not coincidental. Reforming the investment markets, reforming corporate Japan, opening it up, these have had a real difference. And I agree strongly with Joe's comments that allowing outbound investment is also going to be equally important because it will allow Japanese, as they live longer, to generate higher returns. In terms of our investment activity, I would expect over the next 3 years, we'll probably buy between companies in real estate, something like $20 billion US of assets, which is significant and reflects the fact that there's just much more openness. This enormous economy in Japan, as we know, had generally been pretty closed to these type of activities. And now you have companies saying, I've got a fast-growing core business, I can sell off a slow-growing non-core business and reinvest. And the shareholders benefit, that companies benefits, and Japan as a country benefits because it creates more employment. So sort of this flywheel of activity has picked up. It's directly as a result of these changes in policy. And for folks like us, it means our people are working very hard. They're working on the weekends. They're doing conference calls and investment committees late at night or early in the morning with New York. But it feels great, and there's a real excitement about Japan and investing in Japan.
Also with governance? I mean, some of the
governance is a dramatic difference because I think before the general sense was maintain the status quo, that we shouldn't change things. And in a world that's changing as quickly as this one is, in terms of energy, in terms of what's happening in AI and technology. Japan, of course, is a leader in things like robotics. You need companies to adapt, and they need to move capital to where the highest returns are in order to grow more quickly. And that's what we see happening at Japanese companies, and it's unlocking enormous opportunities for us to invest. And then on the flip side, of course, allowing individuals to invest outward so their savings can grow. So we just see it as a real win-win.
You see, as a foreign financial institution, what are some of the requests that you have to the Japanese government, I guess, to keep going, but also promoting Japan as an asset management country?
So first, I would just want to build on some of the comments in terms of the pace, but also the breadth of strategic initiatives and reforms. Obviously, this movement from savings to investment, the focus on the macroeconomic environment, enhancing sort of more of a stable inflationary environment and an increase in wages, along with the efforts by the JFSA and the Tokyo Stock Exchange to enhance overall corporate governance. I think it makes a great deal of difference, encouraging gender diversity and board independence. And for us, I think we really applaud all of the steps taken. We're very encouraged, as you heard, in terms of the sheer volume of potential investments coming into the market, but still would like to see the limits in terms of contributions under the defined contribution realm increased to allow even greater investment on the part of investors.
Rob, what do you see as most exciting in all of this?
Well, we have a very positive stance on the Japanese market. We, as of today, we have overweight positions in the country's equities. Some of the things John mentioned, monetary policy, normalization, wage growth exceeding the inflation rate, and the ongoing corporate reform. So the government's aim to double the amount of its citizens' investment income, I think, is very exciting, and providing the infrastructure to do so in this NISA investment program, very exciting. Now, we are the largest asset manager in the world. We have over $10 trillion under management, and I looked this morning, we have about $540 billion in assets from Japanese clients. So we think that we'd love to continue to bring the scale and the size of these offerings, and we're uniquely qualified to do that. The challenges, though, that Japan faces is obviously its aging society, and that's not unique in a global perspective. So we're very committed as a global leader in helping more and more people experience financial well-being.
Thank you so much. Just, are you confident overall about the prospects for the Japanese economy?
For me?
Yeah.
Yes, absolutely.
Yeah.
I mean, we're quite bullish on Japan. I mean, Japan is a must-own country today for investors. The key, as my panelists have said, is the continuity of these reforms, the continuity of these policies. That's what investors really need as a foundation, right? Is stability, transparency, and continuity so they can invest for the long term in a country like Japan. But we're very, very bullish.
What are you, I mean, is it a crowded space for private equity at the moment in Japan?
I think there have been a lot of articles of the growing demand for private equity in Japan. But when you look at the US or you look at Europe, private equity in Japan, it's at its infancy, honestly. There are much fewer players, probably less than 1/10 of the competition that we face in other markets. So there's a lot of room to grow. The private equity industry will grow also as the capital markets in Japan continue to diversify. Japan today is very much a bank-led economy, right? The main banks in Japan, the regional banks. You don't have the same sort of capital markets in terms of the bond market, high yield market. That's going to be a huge enabler of private equity and the types of transactions we do. And private credit is a whole different asset class, which really doesn't exist in Japan today. So there are multiple legs, and you could see that could really accelerate the development of private equity over time.
John, do you agree with that? And do you worry about bidding wars if more players come in?
Well, there's always competition. You'd love to be in a market where there isn't, but you know, we live in a world where people see opportunities. They get on planes, they build their offices on the ground. But I agree that relative to what we see in the U.S. and Europe, it's still early days in terms of private asset investing in Japan. And the number of players relative to the scale of the economy is still pretty small. So we think it's a pretty favorable dynamic as an investor. And it also feels like it's early days because these reforms have only been in place for a short period of time. And people are excited that the Japanese stock market is above the 1989 level. But think about where that is relative to other markets. And you think about the long-term potential. And you also think about Japan's strength in technology in the world we're moving into. So we have a lot of underlying bullishness around the economy. The fact that the market's opening up and there are a limited number of players on the ground, that all seems to us to be a very good dynamic. And so we want to deploy more capital, have more people there, and generate favorable returns. So it feels very good to us early days. And I would also say we hope these reforms stay in place and they continue.
And that's, I guess, extremely important, especially in possible deflationary pressures continuing, even if we're seeing resurgence in this low growth environment.
You definitely, these reforms, I think, have reversed this deflationary pressure. I think they've been very positive. I think, interestingly, other countries around the world are looking at Japan as a reform leader as they look at their markets to try to reinvigorate their capital markets. We see that talking to European leaders these days. So I think people are recognizing if you open up your capital markets, if you get more investment coming into the country, if you allow your companies to invest more globally, you get this dynamism, and that helps your population because it creates more employment opportunities and more opportunities for them to generate higher returns on their savings. So I think it's been a bold set of reforms, and it has definitely worked.
Yie-Hsin, I mean, again, when you look at some of the things that have worked really well, could this be a blueprint for other countries?
I think it is, as I mentioned, a very holistic approach to the overall economy, encouraging investments, making it easier for companies to provide services and asset management products, and then similarly ensuring that the corporate governance is in a way that will attract foreign capital. I think all of those elements are the right elements, and I would just underscore what many have said before, which is that as we talk to other asset managers, whether they're foreign or domestic, the enthusiasm is very high. At the same time, the expectations are even higher. And so just to underscore this point that while we're off to a really good start, it'll be very important that the Japanese government really sticks to this overall program. I think if that happens, there's a lot that lies ahead that's quite exciting.
Stefanie, in the past, many firms have, I guess, struggled with post-acquisition integration in Japan due to cultural and operational differences. I know that this is changing culturally, but when a foreign investor calls you and says, look, what is one thing that you get asked the most about how to navigate Japan?
So thank you for that question, because I think some of it is a misperception. I think that the way to engage in Japan is to stay as you are, and that spark is what Japan wants to capture. So when we deal with foreign companies, we want to protect their individuality when we bring in, and instead simply give them a platform to sit on which they can operate. And so I think that there is this idea that they have to fully integrate. They don't. You can have a very, in fact, it's a very helpful environment if you want to stick to who you are and if you want to still access Japan. So my advice to Japanese companies is to simply build a bilingual platform that allows them to sit on that and then bring their skill set in. And that's what we've been doing as well. Just one point on NISA, because it was mentioned a number of times about how successful it might be. I just wanted to make a comment on that. It already is. And so just if you look at the first quarter of this year, more flows came into NISA than came into the entire 2023 NISA program. So we probably think that NISA will reach its doubling goal in 2.5 years rather than 5. So it is already a success story. We're already seeing it. But yes, I wanted to just mention that as well, just to say that it's truly there.
And Rob, so what does it mean in terms of, again, your blueprint for the country? How much more, how much bigger, how much more, how will your presence there also increase over time?
So I think the recognition of the asset management industry is really critical, and I think the Prime Minister has it correct. We're managing people's dreams. Failure is not an option here for people to be able to retire in dignity. And if the government takes care of its people well, I think you'll see a growing economy, happy people, and a really thriving industry.
Okay, we're almost out of time, but I'm going to each ask you, actually, what kind of message you would like to convey to the Prime Minister of Japan. So, Joe, let's start with you.
In addition to this fundamental point about continuity and transparency of policy, I think there are one or two other things that could be really helpful. I think to succeed in Japan, it's all about partnership at the end of the day. Whether it's partnering with corporates to give them solutions for their non-core assets. I think there are two other big areas related to asset management. One is partnership with government. Right? There's so many critical sectors for Japan, whether that's semiconductors, technology, AI, and there needs to be more of a collaboration in terms of government capital working in partnership with private sector capital, not government capital crowding out private sector capital. And I think that could be really, really productive if that can get organized. And I think the second broad area is partnership with leading Japanese financial institutions. I think the insurance industry is a great example. There's been a real convergence here in the US and parts of Europe around alternative credit and the insurance sector. There's over $3 trillion of annuities in Japan that the Japanese insurers manage. Second biggest annuity market after the United States. A partnership between firms like us or others to work with Japanese insurance companies. We have partnerships with Japan Post Insurance, with Manulife Japan, and many others. But that could help unlock higher returns for Japanese savers, as well as help these Japanese companies really grow much faster.
Thank you. Stefanie?
So I feel very greedy asking for more because I think already the policies have achieved something that hasn't been achieved in 30 years. So, however, since you've asked, I think simply a continuation of this policy. I think we are at the early stage, and this is the exciting thing about Japan, the fact that we are at an early stage. In other words, the upside is strategic, long-term, and really, really significant. But I would like to see a continued growth in terms of the requirements on transparency of reporting and the corporate governance initiatives that are making firms, for the first time ever, constantly talk about capital efficiency. And so all these changes are in part driven by these requirements, so that needs to continue. But I think the program itself has been, and the policies have been, a huge success already. Thank you.
Thank you. Jon, what would you ask the Prime Minister?
So first off, I just echo the comment on insurance. I think that's another area where Japanese companies have an opportunity to partner and grow globally in terms of their investment mandate and secure the retirement of Japanese. In terms of message to the Prime Minister, it would just be one of gratitude. On a personal level, at his White House state dinner, he talked about visiting Hiroshima, where he's from. I took that up with my family, and it was an amazing trip, very moving, very inspiring, and thank you for that. But in terms of this discussion, just gratitude for taking the political risk to open up your market, which may not be easy, we understand, but the long-term benefits to Japanese citizens as employees and investors will be quite profound, and we are greatly appreciative.
Thank you. Yie-Hsin.
I would add our appreciation also. We've talked a lot about the tremendous initiatives and the reform and policy and the impact it already has had. I would also just express our appreciation for the focus around financial literacy and education when you consider a whole generation of investors that have lived under a different regime that are now in a position to actually take something, their hard-earned net worth, and put that into the market, and hopefully be in a position to achieve all of their financial aspirations and dreams. So tremendous gratitude for your boldness and your efforts and the partnership that we certainly feel from a private-public standpoint.
Thank you, Rob.
And I would just say thank you as well, and I hope for a continued recognition of how important public-private partnership is, as we can do incredible things together.
Well, thank you so much. Prime Minister, you've been extremely patient in listening to everyone. So now it's your turn to take to the stage, to the podium. And thank you so much to all the panelists who can go and take their seats. Thank you.
Thank you.